Hello, this is the TreasuryONE Weekly Technical Analysis by Sven Henrik from Northman Trader, March 23rd. Crash. That's the theme on everything in equity prices, currencies, commodities, you name it. Obviously, bond market. It's been a tremendous damaging event that has taken place over the last month. So just briefly through the equity picture just to get a sense for the breadth and scope of what just happened. Here's a simple chart of the Dow futures. We've never seen anything like this basically since 1929. This is how significant this event is. This surpasses 2008, 1987, 2000 because of the speed of all-time highs. Typically, bear markets take months and years to play out. This one, we're still on unconfirmed lows, and we just hit the 2015 highs here on the Dow futures. So basically, we're talking a 5-year price scale taken out. That's significantly worse than a lot of other indices, small caps, banks, you name it, transports, and so forth. And of course, we see the same thing in Europe. So this is extremely dramatic, and we have to also recognize the extensions now on the technical side to the downside are so extreme. This market, as wild as it's been to the downside, has significant risk of a major snapback, bear market rally. And I'm just speaking technically here because obviously we're currently in an environment where the news seems to be getting worse every single day. And we've seen a lot of that in the last few days. The United States is trying to bring out a stimulus package. I think this is absolutely key today to be able to see a month-end rally to kind of mitigate some of this incredible damage. Extensions outside monthly Bollinger Bands are extremely rare and they don't last. And if you look at back in any recent history anyway, you see either bottom wicks coming into month end or you see rejections. Hence, we were extremely bearish up here when markets were extending to the upside on these monthly Bollinger Bands. But what we're seeing here is unprecedented. And so when we look at ES, I'm now using the ES futures chart instead of the S&P, just obviously because we had more downside Sunday night on the lock limit down on ES futures. Key area was started to get hit here, and this is a number of support pivots that we've outlined that all can turn into a rallying point once the news cycle turns. So last night we basically hit here the 2016 highs. There is support. The next support level is right here on the 2015 highs. And obviously today is key. Otherwise, markets will continue to drop lower as there's absolutely no visibility on the revenues, earnings, and the extent of any global economic shutdown. So this is very key. Every day is now key, basically, and we're just basically hitting another support level. But again, look at these technical extensions, how far we're disconnected from basic MAs. Markets ultimately seek balance, and right now we're at an extreme point of imbalance, and that will seek to repair itself. Does not mean at all we'll get to new highs anytime soon. In fact, we may not for years. The key technical challenge for markets ultimately to find some sort of balance, and that means MA reconnects, and there's a lot of space here should we get a bear market rally unfolding. And keep in mind, those are very common as well. So this is something to watch out for. In terms of currencies, like equities, we saw a massive event last week. The pound completely collapsed and it hit the 2016 low. So this is a key significant zone for the pound to hold. We're still in this pattern here that suggests this compression will ultimately lead to a reversal. But at this point in a crash environment, we obviously have to look at critical support. And obviously 2016 support is key. We're seeing a little wick here, so they're trying to hold that. So again, this to me, as long as this is what happens in crash markets, you're looking for support areas and see if they can hold. So this is a key pivot area, see if they can hold and get us back into this pattern. But now obviously this breakdown zone here would be also resistance. So it's key to see this unfold here. If you have further downside risk, that's really only 1984 here, right? This was crash into 107.9. You can argue maybe this level here 114 would be, or excuse me, 113 is a little bit lower support here. But for now here, this 115 level is key to hold. The euro, same situation. We obviously had that breakout. Now we had this complete failure and this crash below this trend line here. So the euro is trying to hold this level here, the 106, 107 level. Should we drop further, the next big support level here is 105.87. I mean, these are obviously pivot zones that were key support in 2015 and here in 2017. But again, these are additional support levels should we see further weakness. To me, this is now critical that the euro makes this basically a one-off event, recaptures this trend line, and then gets back into this price zone. This is now all very messy here, frankly, and it should not surprise. It's a shock event. We had a very clean pattern, broke to the upside, broke to the downside. It's a shock event, and now we're trying to see control here for price. Ultimately, again, we want to see an increase in the euro here in the next year or two. But with all this central bank printing and stimulus package, I think we're now in kind of uncharted territory. Need to see all these packages come out and see how this shakes out on the currency front. And obviously the US is doing its big package today. And speaking of the US dollar, we had a breakout last week, quite a decisive one actually. This broke above this descending trend line. We also had a fake break here. So this is shock events everywhere in currencies. But this breakout now opens the move to 108 on the US dollar. Should we see this reverse? This trend line here is key to watch as support. So on any weakness on the dollar, this could be a retest zone before it tags higher. Should it fail to hold a real test, then we're going back obviously in this consolidation zone. But technically the path would be that any retest here would hold, and then we could target 108 on the US dollar. But this looks like a clean breakout at this stage. And here, obviously, the ZAR, this broke up. I mean, we had talked about it last week with the eventual target of 19.9. So this has been a clean breakup, but we also need to recognize that we now have one of the largest overbought readings on the RSI in years. And that obviously smells of coming reversal. So caution here. We're also against the previous top here. So this is also an area that has to prove itself, if you will. We have this super clean inverse pattern that we discussed last week, and that has this target. So be aware this is what the pattern wants to go. Be aware we're currently dramatically overbought. So here too, like for example with the US dollar, we may some sort of retest move happening before reaching its ultimate target. But for now, that weakness here in ZAR is confirmed, and the pattern suggests still an ultimate target into 19.9. So in conclusion, basically, we are now at the mercy of the US Congress introducing the stimulus package. Absolutely critical that this succeeds. Markets are now dependent on this. There's obviously a lot of push for it. If they can get this done by this morning, or at least today, then we have prospect for technical reconnect rally into month end. If they fail to do that, we have immediate downside risk further. Circuit breakers at 2143 in the S&P. And then, of course, further downside risk into 2100 and 2000 on the S&P. I don't think either party can afford for this stimulus package to not get approved. So I expect them to come to a positive resolution. The question is, the hours and the day of when this happens. I don't think they can afford to go much beyond Monday, Tuesday here. So key to watch in the hours ahead. And I think that'll drive the development of the next week tremendously. Hope this was helpful. Good luck this week. Thank you.